Okay, well, I think still people are coming in, but the session today is recorded. So if anybody misses the first minute or so, they can always refer back to that if they need to at any point. But yeah, good afternoon or good evening, good morning, depending on where you're joining us from. It's really nice to have so many of you with us today. I saw a few familiar names on the registration list, so it's great to reconnect with you guys and meet you again. But for those of you who might be exploring the diploma for the first time and are just learning about the programme, it's great to have you with us and look forward to connecting further. So just really to introduce myself briefly, I've been in contact with several of you, as I mentioned. My name is Joe Nicholson. I'm the recruitment manager for this programme, so I oversee the majority of the recruitment activity for the programme. The main focus of the session today, though, is going to be with Tim Galpin, who, as you can see here, is Senior Lecturer of Strategy and Innovation at the school and also the Academic Director for the programme. So Tim will be leading the session today, and I'll hand over to him in just a few minutes to tell you a bit more about his background and kind of what he'll be focusing on in the session today. But before I do that, I will just provide a brief overview of the program for those of you who are looking to kind of just gain a top level view of what the program is at this stage. And then at the end of the program, I'll have time to provide a bit of detail about the application process and really answer any other questions that you might have. So feel free to submit any questions that you have. We'll monitor those during the session and answer some at the end possibly as well, if you have anything you'd like to put to either Tim or myself. So just to provide an overview of the programme, and I'll just say that I'll keep the overview relatively brief because I did do a dedicated session which provided an introduction to the programme in a webinar just a couple of weeks ago, and that's actually available on YouTube. So if you're looking for any more detail around the programme structure or delivery or things like content or faculty that teach on the programme and the type of students that you'll could be studying with, have a look on YouTube because that has much more detail about the programme and those key areas. But just to give you a brief overview in today's session, this is about the Diploma in Strategy and Innovation, which is one of 5 diplomas in our portfolio. The programme has originally been adapted from our Executive MBA with specialist added content. It's a really established programme. It's been running for a little over 10 years now, so we have a really strong community of alumni from this programme itself. It's really designed for executives who are looking to study a part-time programme. They're looking for something with real kind of academic rigour and a real specific focus around strategy, innovation, and kind of sub-themes within that. It's not a full degree programme. It's taught and assessed at master's level though. So it's a standalone qualification from the university. It's delivered in 4 modules that are taught over 12 months. And the structure is so that it's in a 4 by 4 day module structure over 1 year. And it's designed to be flexible for people who are working and studying. This is an accredited programme. It's a serious standalone programme from the University of Oxford. And as I said, it's taught at the same level as our EMBA. So that means that it's an accredited programme and you're assessed based on what you learn. So across the programme, you would have 3 case study based exams and 1 final integrative assignment at the end of the programme that's designed to be able to be linked back directly to your organisation or a specific area that you'd like to focus on. We have 2 intakes for this programme every year. As you can see here, starting in January and March, respectively, next year. And we expect the classes to be around 50 students in each, approximately. And there is a pathway from this diploma to our Executive MBA, which allows you to carry forward credits and also be eligible for a discount on the tuition if you're interested in exploring further studies at the school. A brief overview of just the content and what's covered. And as I say, the previous recording has much more detail on this. You look at a core module focused on strategy and key principles around strategy in the first module. You look much more deeply around innovation and kind of frameworks in that space. In module 3, you build on the first 2 modules and really start to think about both of those things in a real kind of global setting and the complexities that are at play there. And finally, at the end of the module, you really kind of draw together much of what you will have focused on and think about how you can actually how you can go about implementing this in your organization. So that's kind of a summary of the main areas you cover on the program. And here's just a slide to really map out what the structure of the program looks like in terms of the modules and kind of what your time looks like in between the modules and across the duration of the programs. You can see, as I mentioned earlier, the 4x4 day structure and the 2 cohorts that run at the same time throughout the year. But the 2 intakes are separate. There's no real difference between them. We do just have two separate cohorts running due to the popularity of the program. A question that comes up really often is kind of what the self-study commitment looks like in between the modules. And we give the guideline that it's around 5 to 8 hours worth of study per week. And that's really kind of working towards things like pre-reading for modules, case studies, and also working towards the assessments that you have on the program as well, as I mentioned earlier. Understandably, at the moment, there's a lot of questions around delivery and what that looks like for the program next year. Now, I won't go into that now. I would say if you want further kind of detail on that, either reach out to me individually, or again, please refer to the session I've already mentioned that's available on YouTube for more information about that. But it would be great to speak to each of you if you're interested in finding out more. So that's it for me from now initially, just to set the scene, provide an overview of the program, and give you an idea of kind of what the structure looks like and what you could expect. So I will hand over to Tim now, who will tell you a bit more about himself and the session that he'll be running today. So I'll stop sharing my screen and just hand over to Tim.
Okay, thanks, Joe, and welcome everyone. Go ahead and share my screen so you can see what I want to walk you through today. I also will monitor the chat and the Q&A as well, along with Joe, and we'll go ahead and address those towards the end of the session. So as Joe mentioned, I am the program director for the Diploma in Strategy and Innovation, and I'm also a faculty member at the business school. I teach strategy and my area of expertise, mergers and acquisitions. So, and I also teach entrepreneurship as I've done some of my own businesses in the past, as well as done some research in that area. But what I want to walk you through today is a bit about the mergers and acquisitions topic. I can only give you a broad brush overview in a very short period of time, so I can't make everyone a M&A expert. Some of you may be M&A experts in the roles that you are in, whether you're in banking or in the corporate development function or strategy function of your organization. You may have bought or sold companies in the past, and others of you may have had no exposure at all to mergers and acquisitions. So it'll be a bit of a primer, and I have a few questions for you. So I'm actually going to use the chat function to ask you to respond to some of those questions I'll ask you. So let's go ahead and get started. So I have a few objectives I want to achieve over the next 35 minutes or so. And the current state of M&A, current trends. We know that COVID locked down economies around the world, which included the activity around mergers and acquisitions. Key challenges across the entire process. M&A success and how does that look? We hear a lot about how difficult M&A is to make work and to succeed at M&A. We'll talk about that. And then how do you manage M&A across the process to create maximum value? Because I'd like to see you do it well rather than poorly if you go into buying or selling a company. So let me ask you a question. So I know some of you may have done M&A, but what interests you most about M&A? What aspects? And I'm talking about the end-to-end spectrum of M&A, everything from setting a strategy all the way to looking at target companies, assessing those companies, doing due diligence, closing the deal, and then post-deal integration, success measurements. So go ahead and type in the chat and don't be shy. We have enabled the chat function, so go ahead and type in what you think you might be most interested in. around M&A, because as we run our program, it's not just a typical lecture format where I would just, speak at you. It would be interactive. You'll get asked questions. I see Jimmy put in value creation, success measurement. Tarek put in to the Q&A. You can use the Q&A. Eduardo, I haven't had a lot of exposure. I'm interested in identifying good M&A candidates and running the due diligence process. Absolutely, super important. You need to know what you're buying before you buy it. I see there's quite a few participants and we only had 3 responses. So as I mentioned, this will be an interactive program. So I'm going to try to get you warmed up to interact if you decide to join our program. It's not just faculty lecturing at you. You're going to learn just as much from your cohort as you will from our faculty. And that interaction between the faculty and the cohort participants creates a really rich learning environment. Bernard, how to do due diligence. Rick, deal structure, because it matters, absolutely. So a lot of these things, again, I'm not going to be able to go in a lot of detail today, but I'll try to touch on them. Ability to augment capabilities and competencies. Thank you, Craig. All right, good. So here's why I got into M&A. So if that interests you, all those things interested me. I was doing strategy work and re-engineering work. So this is my second career, essentially, working here at Oxford as a faculty member. It's my retirement career. I do have a PhD from UCLA a million years ago. And when I was finishing that doctorate, I decided I wanted to go into industry. I worked as a project manager at Hughes Aircraft in aerospace. And then a friend of mine who was actually doing his MBA while I was doing my doctorate called me and said, do you want to start a business in London? So we started a consulting business back in the late 80s and grew that for about 5 years. We sold it to Arthur Andersen. I joined them by acquisition. So that was my first exposure to an acquisition on the sell side. And from there, I joined Booz Allen. I became the global head of M&A for Watson Wyatt Worldwide, which is now Willis Towers Watson, which is also going through a merger with Aon, or an acquisition by Aon, and which is one of the biggest deals of the year this year. And then I started my own business again, doing M&A, and I sold that in 2005, which freed me up to do this as my retirement gig. So I've been teaching since 2005. I've been at Oxford. This is my going into my 5th year. So the reason this slide's called Half-Life is because there's an old book that talks about you spend the first half of your life trying to make money, second half trying to make a difference, and that's my career to a T. So you're going to not just get the research view of the world, which you will get from various academic faculty. You'll also get the practical view of the world from people who've been out working in executive positions, running global businesses. I used to have 90 offices in 30 countries, and so my office was an airplane. Now it seems to be Zoom, but hopefully as things open up, I'll be able to get back in the classroom in person again. So that's a little bit about why I got into M&A. So here's a bit on the current state of M&A. This is stats from Merger Market for their end of year report from 2020. And you can see that in the first half of the year, M&A was down, but in the second half of the year, M&A took off again. So as COVID closed things down economically around the world, M&A came to a halt, which ended about a 10-year wave. After the crash of 08-09, M&A is going waves. And this was another wave that we encountered for about 10 years. And that wave came to an abrupt halt because of COVID. But the second half, it picked up. So deals announced in the second half of the year were the highest that they've seen in merger market data since 2007. So, and that's continuing into this year. There are winners and losers because of COVID, both at the company level and the industry level. So companies who have strong balance sheets with a lot of cash or have access to debt, stock valuations are high. These are all currencies you can use in M&A, are buying companies. And some companies that are struggling because of what they encountered during COVID are being bought. So it is a buyer's market right now, and we'll see how long this next wave lasts. So on a global basis, looking at both the developed and the emerging economies, you can see the bulk of M&A happens if you combine Europe and the US, you get about 2/3, 66% of it or so, 67%. And then it's scattered around in South America, Africa, and Japan is the little number over on the right side, or the outlier over here. And then you see in Australia. And this is based on where the headquarters of the company would do the acquisition. So if you want to see the data, this is actually a free report that Merger Market puts out every quarter and every year. So this is the 2020 global report. Just go to mergermarket.com and you can download it as a PDF and see based on banking rankings for investment banking, for legal firms, as well as overall deal activity based on industry and region of the world. So there you go. So non-market strategy among the key considerations when conducting emerging market M&A. So non-market strategy is just kind of the academic term for strategy that isn't within an industry, meaning or the impact on a company's strategy that's not within the industry. So you have within the industry, your own company, your competition, suppliers, buyers, the old Porter 5 Forces model, which is very robust because it's still relevant today to do industry analysis. And but non-market means things like the government impacts, NGOs, and other entities that exist outside of the industry market. So if you're doing M&A cross-border and you're doing it in emerging markets, what might be some of the key considerations? And again, go ahead and use the chat or the Q&A that you might want to consider if you're doing an M&A in an emerging market. Again, vote early and vote often, as they used to say in Chicago. Legal structures, absolutely. You're going to find different legal structures as you cross borders, whether you're crossing into emerging markets from developed markets or vice versa, or developed market to developed market. Part of the merger and acquisition course that I teach, we discuss the legal structures and the differences between, for example, the UK and the US, the EU, et cetera. And these are different legal structures that you'll encounter and how they regulate their deal flow. Tax considerations, absolutely. Political impact, that's definitely something. Thank you for that, Jimmy and Rick, anonymous attendee. Also put in some comments here. Regulation, absolutely. So you're going to run into all kinds of differences when you cross borders. Again, whether it's crossing distant borders or even adjacent borders, you're going to run into these things. So here's just a smattering of some of the things that you put into the chat. Emerging market M&A, some of the key considerations. There's a higher proportion of family-owned and government-owned entities when you go into emerging markets. You'll find a lot of private entities owned by families, family offices. And so you may be dealing with those if you're looking at acquiring in a emerging market region. Partnerships and joint ventures are often required. So again, based on legal structures and the governmental regulations, you need to have joint ownership with a local entity and not just be able to necessarily own 100%, again, depending on the jurisdiction. Government stability, questions of financial reporting transparency can get opaque depending on the region, depending on the company. Private companies are more opaque than public companies, obviously. So again, the importance of government influence review and connections, et cetera, as some of you have already put in the chat. So what are some of the key challenges across the process? So a lot of schools teach M&A, and we have a full M&A course in our full-time MBA program. We have in our executive MBA program, and I do a mini course, what I call a M&A deep dive series in between the 4 modules that Joe described. I've started that this year, and in between each of the 4 modules, so I do 3 1.5 hour, what I call deep dives into particular topics on M&A. So the first one is around M&A strategy and deal making. The second one is around due diligence and integration. And the third session is on the human side of M&A. And so the way we teach M&A here at Oxford isn't just as a financial course, which you'll see a lot in different business schools. M&A being only taught is essentially a valuation course. We have a separate valuation course if our students in the full-time programs. So if you're going to be interested in M&A, I suggest you not just look at doing valuation. That's important. That's a complementary course to our course. Or negotiation is another course that we have for our full-time program. But these are all things that are included in the M&A process from beginning to end. And when I say end of M&A, it's not when the deal closes, when money changes hands and the acquirer actually owns the company. It's post-deal integration, the people aspects, as well as the operational and technical aspects of both due diligence and integration. So we look at it all the way from strategy, targeting companies. So you see the 10 stages over 3 phases. This is in my latest book. Each of the chapters is on one of these stages called Winning at the Acquisition Game. You will get if you join the program, you'll get a copy of that book as part of the deep dive series that I'll do in between the 4 week-long sessions. So you formulate your acquisition strategy, you locate target companies, your investigation is your due diligence. The deal phase, you evaluate those companies, your basic valuation models from comparable and precedent transactions, discounted cash flow, and an LBO. Your negotiation tactics and techniques, closing the deal and all the legal requirements, and then your post-deal integration, both on the cost takeout and the revenue generation side. So the innovation for revenue generation. And then how do you evaluate deals? And a lot of companies don't do a good job of whether they have done a good deal or not. So we look at it from beginning to end. It's a comprehensive course. And any one of these areas provides both learning opportunities as well as employment opportunities. So we've had students go out of our programs, whether they're full-time or even our diploma programs, and decide they want to do more M&A and get involved in either the front end deal process on the due diligence side, maybe if you have a corporate finance background in banking or in a strategic buyer as a corporate finance staff member, or on the integration side. So these are all important areas and aspects of M&A. And here's some of the key objectives. Joe, I can send you the slides and you can share them, right, with participants if they want them. Is that possible? I know I've done that.
Yeah. Yeah, I'm sure that's fine if you're happy with that.
Yeah, no problem. I mean, these are public information. They're in my book. You know, I'm open source. I don't, you know, it's the tools are tools. How to use the tools and how to effectively implement that comes with, you know, over 3 decades of experience. And I have guest speakers in my full-time course that are, you know, heads of investment banking, former Goldman Sachs partners, McKinsey partners, et cetera. And we all say the same thing. You know, we've been doing this for over 30 years and we still learn something new on every deal. So I conduct a survey periodically around the current state of M&A. There's other data out there that says M&As are hard. They're difficult to make work. So you get, you know, deal stats like the first bullet here, 2,500 deals reviewed, found that more than 60% destroyed shareholder value on the buy side. So if you're a seller, you're typically going to get about a 30% acquisition premium because companies are going to pay a premium to buy you. Most companies will not be sold, or whether it's a full company or an asset, for the current value of that asset. They'll sell based on future value, or you'll be acquired based on future value, hence the discounted cash flow from the future value of the company. And so a buyer will pay a premium, and to get that premium, achieve that, and that return for that premium paid, they need to capture what's called synergies, reducing costs from overlaps, if it's a consolidation type M&A, and or increasing revenue, putting companies through your sales channels, your marketing, et cetera, to increase revenue. So cultural due diligence was reported by over 2/3 of our respondents in our survey as being average or below average. So people have a hard time. Deal makers are financial types, and they either discount the impact of the culture side, of doing deals, whether it's between companies or between countries, and or they just don't know how to deal with it. And I have tools and templates to deal with that. Again, they're in the book, they're in the deep dive series that I'll do if you're part of the diploma program. And then the final bullet, almost half of the survey respondents in our last survey said they're in need of merger repair, meaning they've done deals and they aren't going well 2, 3, 4 years after the transaction. Key customers have left, key employees and executives have left, stock prices down, et cetera. So common M&A challenges. Again, go ahead and type into the chat or the Q&A. What are some of the challenges you might run into in an M&A? I just mentioned a few. And while you're thinking about that and typing in your challenges, Anonymous puts in, I wonder whether pandemic has impacted on and contributed to healthcare and fintech sectors to gain more popularity in the M&A scene. Absolutely. So as I mentioned, there's winners and losers. And actually even within industry. So in retail, obviously brick and mortar retail took a big hit because everybody was locked inside and couldn't go out to the shops. But online retail took off. So the online retailers are buying a lot of the brick and mortar retailers. So the winners are buying those that suffered during COVID. You're seeing a lot of activity occurring in the healthcare sector, whether it's biotech or pharma. Their stock valuations are up and they're very sought after companies, but they're expensive companies to buy. So the bigger companies are looking at buying some of these smaller companies, but because valuations are so high, they're going to pay a very high premium. So what challenges would you run into? Company culture, thank you, Fabello, is a huge challenge. When you, even within the same country, different companies have very different cultures. Other key challenges, historical valuations, Rick puts in most, make the case for higher valuation. What do you see as a future of value? Future of valuation is whatever companies are willing to pay for another company. So valuation is a calculation, price is a negotiation. So if you're a seller, your company's worth what people are willing to pay for it. If you're a buyer, the acquirer is worth what they're willing to sell for or what other bidders are willing to pay. Sometimes you're in a sole bidder situation, sole source negotiation with a seller. Other times you're in a bidding process competing with other bidders to buy a company. In the bidding process, sellers get about 10% more, even above the premium that they, on average, that they would get from a normal transaction. So if you're a seller, you will make even more money if you go into an auction bidding process. Valuations, pleasantly surprised on premiums that buyers asking for in the African markets. It's a big growth area in the African markets. They're in financial services, doing a lot of acquisitions, is kind of the beginning of the wave of African continent acquisitions. They're starting in South Africa, but moving into more sub-Saharan and other portions of Africa. And so the valuations are going up as well, because again, it's demand, supply and demand. M&A is basic economics, right? So the more, and M&A is a herd mentality. You'll often see industry waves of M&A. Right now you see a lot of industry consolidation in mining, for example. Technology, pharma has been doing it for a number of years, but mining is consolidating. So I still consult. I've worked on a number of mining deals over the past few years. So it goes in waves. People issues, integrating the buyer's culture. Again, thank you for that, Emmanuel. COVID discount of sorts, surely. Zolani asks, not surely, you're making a statement, not asking a question. There are COVID discounts, again, depending on whether the company has been damaged. If the company has been enhanced because of COVID, either they have a product or service that COVID people wanted during COVID. You're seeing super high valuations for delivery companies. Some are saying much too high valuations. They're seeing high valuations for online retail. But then you're seeing lower valuations for brick and mortar retail or hospitality, for example, pub chains, restaurants, et cetera. So let's go ahead and move. Common challenges, I just mentioned a bunch of these. I'll just point out the big bold bullet at the end here. Small deal failure can be absorbed. What you find if you look at M&As and how acquirers actually do succeed, because not all fail or destroy value. The ones that succeed do a lot of smaller deals. If you make a mistake with a smaller deal, it's easier to absorb that. If you make a mistake with what's called a transformational deal, then you have a problem. Transformational deals double the size of your company, as an example, based on numbers of employees, revenue, market share, et cetera. And if you make a mistake with a big transformational deal, you are literally betting the future of the company on that deal. The AOL Time Warners, the Daimler Chrysler debacle, the most recent one, Bayer Monsanto, because of the Roundup lawsuits that Monsanto brought with it into Bayer. These are all super big value destroying deals that make the news, and you can read those. When you come to Oxford, you'll get a bit of theory because we are an academic institution, so you're going to get some theory. This is one theory called bounded rationality by Herbert Simon back in 1957, essentially saying that essentially humans are rational, but they have a bounded rationality, meaning there's a fence around our rationality. So when we have asymmetric information, either too much or too little, we make bad decisions, or it's more difficult to make decisions. Time constraints, where we have to accelerate things and we're under time pressure. So, and you'll see that in M&A. Oftentimes deals can move either very slowly or very quickly, depending on the pace of the deal. So those time constraints can make you enter into bad decisions as well. And then cognitive limitations. No matter how smart everyone is, and those that come to Oxford are typically fairly smart individuals. It doesn't matter how smart you are. There are certain things that are so complex, not one individual can figure it out and make all the right decisions. So M&A is a team sport. You get your bankers involved, you get your attorneys involved, consultants, sometimes specialty consultants, IT consultants, environmental, depending on the industry, public relations, et cetera, et cetera. So if you work M&A as a team, as a coordinated team, you're going to have much better outcomes. So bounded rationality says under these asymmetric information, sometimes too much or too little, again, depending on the region of the world, often too little information, depending on opaqueness in emerging market organizations, for example. Time constraints, accelerated deals, and then cognitive limitations, where you're smart, and the biggest mistake smart deal makers make is thinking that they're the smartest person in the room. The old Enron, if you ever watched the Enron documentary called Smartest Guys in the Room, didn't turn out too well for them. So why do firms pursue M&A? Go ahead again, type in why firms might pursue M&A. If it's hard to do, hard to make work, hard to gain the value as an acquirer from the premium you pay, why would you do M&A? Let's see, I see some things. Understanding of great value, process, M&A activity. These are all the reasons it's hard. Growth, yes. All right. Dizkami, I hope I'm pronouncing your name correctly. Thank you. That's essentially the main reason. It's a shortcut to growth. Industry consolidation, if industries mature, you'll see industries consolidate where they're using a lot of M&A to take out costs from overlapping operations. So they're working on the cost side of the equation. But often it's a shortcut to growth. So you're going to see various reasons firms pursue M&A, operational leap, shortcut to growth. Good job. So the risk is eroding deal value through poor M&A approaches throughout the process. So on the front end, you value companies incorrectly. You don't have a good M&A strategy. You pay too much for the company. On the back end, post deal, you're doing poor integration and not getting the value that you projected and you paid for. So what does M&A success look like? Here, we talked a lot about deal failure, 2,500 deals, 60% destroyed shareholder value, et cetera. It creates value for the seller because they're getting a premium. But This is a global manufacturing company, about 2 billion in sales, did an acquisition. It was transformational, about 775 million, so a good addition to their revenue globally. Had a 75 million cost savings target. Internally, they thought they could get about 106 million. So they're under promising, trying to over deliver. And here's what we achieved with them. Having a clear M&A methodology, an approach to both the due diligence, the planning of integration, and the execution. We accelerated the timeline from 18 months down to 9 months. You can see across service centers, headquarters, consolidation, different locations around the world, including South America, Europe, North America. The synergy targets, the green line, is what we achieved in 9 months. We got 174% above the target, or 131 million in cost savings, whereas they had promised Wall Street about 75 million in savings, and their cash flow was accelerated. Obviously, the savings generated a good cash flow. The CFO was very happy about this. She ended up on the cover of CFO magazine in an article called Making Deals Flow, because she used a lot of the cash that was being generated to pay off the debt that they used to actually transact this deal. And then their share price over the next couple of years was on a steady climb, which is a success story rather than one of the failures. So created value rather than destroyed value. So how do you do M&A across the process in a positive way? I'm just going to run through these real quick. People have me issues. You got to deal with the people elements, executives, middle management, employees, my job, my pay, my benefits. They worry about these things until they get an answer. Either they know they have a job or they need to leave, or if they have a job, where they're going to have to work, how much are they going to get paid, are their benefits going to take a hit, etc. What's the new culture I'm going to work in? Creates an inward focus. This is a typical productivity drop during an M&A, any major strategic implementation, by the way. Senior management find out first, so their productivity drops first, but comes back first. Middle management, productivity drops second, they find out next. And then employees typically find out last, so their productivity drops, and sometimes doesn't come all the way back because management do a poor job of communication, managing the implementation. Because a killer phrase that you'll hear in M&A is, we won't tell them anything until there's something to tell. Another killer phrase, they just need to get on with their work. The deal is done, time to get back to work. The deal is only beginning when you close the deal. The employees in the middle management are always wondering when the announcements are going to be made about job cuts, relocations, et cetera. So senior management needs to manage from the perspective of the middle management employees. The senior teams I've worked with over the years, often they're comfortable and they just go on to the next deal and ignore that implementation piece. Survey done by Deloitte in 2019, 1,000 M&A executives, both in private equity and in strategic buyers, companies that buy other companies. Effective integration was seen as the most important factor. Economic certainty, which we never really have, was the second most important. And accurately valuing targets was the third most important. So just some, I'll wrap up with just a quick overview of the key pitfalls, if you want to look at the bottom of each one of these slides and the objectives. So a clear strategy. If you have a poor company strategy, you're going to have a poor M&A strategy, because M&A essentially is not a strategy unto itself, helps a company execute their strategy, growth into new markets, new products, industry consolidation. So unless you're a private equity company, that would be your strategy. M&A is obviously your strategy, but for a strategic buyer, companies that buy other companies, you're executing strategy through M&A. So a good strategy can be facilitated through M&A. Opportunistic M&As are not good to do. You need to be intentional about your deals. Opportunistic creates buyer's remorse. Your due diligence, only conducting traditional financial and commercial due diligence, operational due diligence, and forgetting the human capital, the cultural due diligence. Valuation, not using multiple valuation techniques, making the wrong assumptions. Valuation is all about the assumptions you plug into the model. Negotiation, poor negotiation preparation, prepare and you'll do better. Closing the deal, you got to manage the regulation when you cross borders. You have regulators and various entities around the world, different company or countries You have to pass their hurdles to close those deals. Integration, don't delay starting and don't delay finishing. Get the integration going and get it done. It's like pulling off a Band-Aid. It will be slow and painful or fast and painful, but it will be a bit painful as you go through integration. Motivation, you got to work on the people, not just the operations and technology integration. And there's tools and templates that I have for that. Innovation, work on the top line and not just the bottom line. Grow the revenue in addition to taking out costs, and then measure your success. There you go. Simple as that. So now you should be able to answer 4 key questions. Who has one key takeaway? Go ahead and type it in the chat. I know it was a fire hose, but if you have one key takeaway from what you just saw for the last 40 minutes, anyone? Let's see, type it in the chat. Opportunistic acquisitions are typically a bad idea. Good point. Thank you for that, Craig. Understanding so much on the buy side, how much time is spent on the sell side, for example, unwinding a company on previous acquisitions. We spend time on the sell side in our acquisition course. Actually, one of our speakers is one of our graduates from our full-time executive MBA. He's written a book. If you're interested in the sell side, it's called The Intelligent Exit by Mark Carmichael. And Mark is a graduate of the Oxford Executive MBA cohort number 1 about 15 years ago. And it's a nice little paperback, cheap. You can get it on Amazon, but it's called The Intelligent Exit by Mark Carmichael if you're interested in the sell side piece in more detail. Importance of integration, often overlooked. Absolutely. Thank you for that, this comment. All right. Thank you. And I look forward to seeing you in the program. Back to you, Joe.
Brilliant. Thanks for that, Tim. That was great. Hopefully that's given people a kind of taste of what you might expect on the program and the sessions that Tim mentioned in between the modules as well. I will just pick up briefly to cover a few more slides that I have. And then if you want to continue submitting any questions you have for either Tim based on the lecture or any program related questions, I'll be happy to take those at the end. Okay. So if you're interested in hearing about the next steps and what's actually involved in applying for this program, I'll cover those here. So firstly, in terms of the admission requirements and what we look for, typically we look for people to have a good undergraduate degree and a minimum of 5 years relevant professional experience for the program. Something that comes up quite often is whether a GMAT is needed for this program, and the answer is no, it's not, based on the kind of nature of what you study on the program. So your candidacy will be assessed on different areas. So if you do want to apply, there's a couple of things you need to start preparing and kind of working on. The first one would be getting a hold of your degree transcripts, which some people appreciate if they might not have studied for years. It might take them to get in touch with the university to kind of explore how that works. So that's the first thing to consider for any degrees that you have. You'd need also to provide an up-to-date CV. Think about 2 referees who'll be able to give you references. You can either have 1 professional reference and 1 academic, or if you prefer, you can have 2 professional referees. That's absolutely fine. The final thing will be, there are 2 essays involved with the application, one focused around your motivations for studying the program, and the other around your current or your latest role, and really what you're hoping to gain from studying. The other thing to point out is, depending on your experience of working in English, there may be a need to either look at an English entrance requirement, which would be IELTS or TOEFL. But if you have extensive experience working in English, then it may be possible to gain a waiver for that test. But just get in touch and speak to us, on an individual basis, and we'll explain, more about that. And then once you have submitted, usually we try to get a decision to people quite quickly, within about kind of a time frame of 3 weeks, typically. Some key deadlines to think about. One coming up quite soon in July. We do review applications on a rolling basis, so it is possible to submit in between these deadlines, and we'll try to give you prompt feedback once we have a complete application. But there are certain deadlines to be mindful of, particularly in September, as you'll see, and October, which are when we have some of our scholarship deadlines. So our first round of our director scholarship is in September, second round in October, and our women's scholarship deadline is on the 18th of October. So they're key to bear in mind. And these applications are all, deadlines are all related to the 2022 program. So the intakes I mentioned before, starting in January and March next year. So next step, get in touch. I'd love to hear from you. Download one of our brochures, have a look on our website if you're looking to get a kind of overview of the program. If you'd like me to assess your candidacy provisionally, feel free to submit your CV on our website, and it will be great to set up a call and speak to you further and learn more about your background and your interest in the program. My details are here for you to see, but they're also available on the website.
Joe, there's a few questions that came
Perfect.
in. The program.
Yeah, so I'll stop sharing now because that's the end of the slides. So if there are any.
Okay, so Sandeep asked, for international applicants, do you sponsor student visa?
So it will depend on where you're coming from, but as part of the process, we would provide a support letter. Yes, for any student that might need that to apply for a visa. Once you hold an offer and you've confirmed your place, our admissions team would provide a copy to help with your visa application. And we have a dedicated team here at the university who we can put you in touch with. And that's their day-to-day, they're experts. So if you have any real specifics, we'll put you in touch with them.
Yeah, it's a very international university. It's a very, all our programs at the business school are super international. We have 60 nationalities across various programs. You'll see within your cohort, if you decide to do the diploma program, you will have about 50 or so in your cohort, and they'll be from all over the world. So it's a great networking opportunity and learning opportunity from a geographic perspective as well.
Yeah.
Other questions on the M&A. How would you identify overvaluation at the Bello? There's no hard rule of thumb overvaluation. You saw IBM paid a 52% premium for Red Hat a couple of years ago. If they can get the value out of that was projected, then they didn't overvalue the company. So there is no hard rule of thumb on that. What else was asked? Acquiring a company, which would you consider equity value or enterprise value? Thabello, you obviously have done M&A because you know the difference. In M&A, there's a thing called enterprise value, or headline value. It's what you read in the newspapers. Company X is paying $1 billion for company Y. That's not necessarily what the owners of that company, either shareholders or private owners, will get for that company. There's a thing called equity value, and you subtract from the enterprise value certain items like cash will go back to be deducted or added actually, and go back to the owners. You will deduct working capital, debt. So these are all adjustments. Net debt is cash minus debt. So these are all adjustments made. So you may pay, may say they're paying $1 billion, but the actual money that changes hands may be 800 million or 700 million, depending on the deductions from the enterprise value. It was what's called the equity value. Yeah, so Joe put in the YouTube Introduction to Diploma in Strategy and Innovation webinar. So the link is in the chat for those of you who want to take a look at that webinar. Any other questions about the program that Joe can answer? About M&A. You're welcome for our time. Thank you for attending, Craig and Alexander. Appreciate it. You asked the key learning we had turning that thought around for your cell phone. If you aren't bound in some way, you take away, instruct about recent. Yeah, I don't talk about certain particular deals, but in general, I like M&A. I've done it for over 3 decades now, and but buyer beware, and because sellers will make money typically, they're getting a premium for their company. Buyers will struggle to make money because they're paying a premium, and they got to be good at execution, not just doing deals. They got to be good at implementing deals. Even private equities have realized that. Their playbooks are going beyond just the deal process. They're going into the integration realm. And I've worked in both commercial strategic buyers as well as financial buyers like PE to help them build their playbooks, especially on the integration piece. So I've worked on biggest deal, 42 billion when our Seller Steel was formed, and hundreds of thousands of employees globally. And the smallest deal I've worked on was 4 employees in an Israeli technology firm was being bought by a Silicon Valley client that I had for 10 million. I've worked on everything in between. I'm industry agnostic, geographically agnostic. I've worked on every continent, pretty much in every industry: tech, retail, transportation, oil and gas, chemicals, manufacturing. I can't really think of an industry I haven't worked in because the issues on deals, especially around due diligence or certain specialized things, but integration, the dynamics are pretty much the same across industries and geographies. And I mean, M&A is a complex activity and I love complex things. I hate puzzles, they bore me, but M&A is a hugely complex puzzle that doesn't bore me at all. I'm always interested in, I worked on the Goldcorp acquisition by Newmont a couple of years ago. It was another big deal, 10 billion, biggest in the gold industry, gold mining industry. Craig, as you mentioned, free cash paying down debt, that seemed to be a big driver. Yeah, I can't comment on particular deals. There are certain ones I work on. There are other ones that they may be clients of ours at the university because we do have executive education programs specialized for companies. So I'm not allowed to speak about particular companies because I may offend some of our companies we work with. So I can't do that.
I can see one question, which is quite a straightforward one, just about, again, the language requirement, IELTS. Is it mandatory? No, not necessarily. We review candidates on a case-by-case basis. So it will depend on things like your work experience, how much of that has been in English, how much is currently in English, whether you've studied a formal degree in English as well. So it will depend on a few of those things. And we give the full criteria on our website. But if you have any questions or would like me to discuss that further, feel free to send over your resume and we can have a chat about that.
Great. Joe, thank you for having me do the session.
No, thank you, Tim. It's been great. Really appreciate you taking the time. I'm sure everybody has thoroughly enjoyed it. Fascinating subject. Thank you again. Yeah. Take care. We'll, if there are no more questions, I think we'll
see you in the program.
Yeah. Thanks for joining, everybody. And we'll see you soon, Tim. Take care.
Take care.
Thanks.